The time has come for the policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on the incoming data, the evolving outlook, and the balance of risks. These are words directly from the head chairman of the Federal Reserve, Jerome Powell, stated on August 23rd, 2024. We've been saying this for months. The Fed has overmedicated, and they'll be forced into a position to quickly reverse course. And we believe this is exactly what's beginning to unfold. Now, it's important to note the cut that is just about a guarantee at this point to take place in the September Fed meeting does not mean mortgage rates are going to fall by that exact same amount. In fact, you may have already heard us say that the improvement has already been baked into mortgage rates, but that is entirely based upon the fact that they end up cutting 0.25%. Let's not take the cards of a larger cut off the table yet, which would indeed cause a rally in mortgage rates as a surprise. Now, the reason I say that is because of the additional comments Jerome Powell made. He stated that inflation has declined significantly, and his confidence has grown that inflation is headed to the path of 2%, which has been their target from the beginning. In other words, growing inflation is no longer the threat, which explains why the markets have placed a 33% chance that they cut 0.5% in the September meeting. The problem now is the other half of the dual mandate. Yes, the job market. Powell stated the labor market conditions are less tight, or in other words, just weaker, than pre-pandemic numbers when inflation was below 2%. This means the labor market is no longer a threat to inflation. In fact, it's quite the opposite and poses a higher risk towards a recession. We've said this before, but recessions do not equal house prices going down. But they do mean lower Fed rates, which is ultimately going to influence mortgage rates to trend down further. Now, what does this mean to you as a consumer or as a realtor? This means we are closer than ever to that sales activity rally that we've been discussing for the last 2 years. This also means that your ability to negotiate a good deal and overall avoid those multiple offer situations is starting to close. The writing is on the wall, and this is coming directly from the head chairman, who has been overall very hawkish towards inflation leading up to this point. So the sudden change in demeanor pulls a lot of weight. Act now before it's too late. And if you have any questions for us, we're here to help.